Hey guys, welcome back to another video. In this video, I'm going to be talking about 3 stocks that Cathie Woods owns that could get better gains than the market in the coming year. The first stock that I'm going to talk about is the first stock in this article, which is Teladoc Health. Teladoc Health is up about 800% over the last 5 years, and if we look into their annual report, we could get a good look at the financial health of their business. This right here is their balance sheet, and based on this, we can see that they've grown pretty substantially from December of 2019 to December 2020, expanding from $1.6 billion in total assets to $17.7 billion. So that's a massive gain. And their total equity has increased, stockholders' equity, from $1 billion to $15.8 billion. Right here in their income statement, we can see that from 2019 to 2020, their total revenue has basically doubled from $500 million to $1 billion. However, they are still operating at a bit of a net loss. And then finally, I'm just going to skip to their cash flow statement right here. And we can see that their cash provided from their operating activities was unfortunately negative in 2020. And they also spent a record high amount of money on investment activities, specifically from what looks like the acquisition of businesses, which played a large part in the increase in their balance sheet as well, which we can see right here, goodwill being a substantial portion of the increase in their total assets. And then lastly, from the cash flows provided by their financing activities, we can see right here that that came out to be about $850 million, which is by far the largest amount that they've produced from their financing activities so far. The main revenue sources for Teladoc Health include, as we can see on page 11, include their reoccurring subscription access fee and their per member, which they charge on a per member per month basis, and then also the sale and lease of robots. The main competitive advantages that they have are that they're the leading international virtual healthcare provider, and also that they have the first mover advantage and a growing global footprint. And then lastly, their growth strategy in the future that's really going to help them hit those numbers and provide a lot of value for their investors is that they want to try and provide virtual access to general consumer healthcare, which will expand their clinical services. And the reason why I'm not going to be doing a discounted cash flows analysis on this business, which I will be doing for the next two businesses, is mainly because if we go to Yahoo Finance right here, and let's say we went to analysis and scroll down, we can see that the growth estimates for this business at the moment for Teladoc are actually negative. And also, if we go to the statistics tab, we can see that their total cash compared to their total debt, they actually have more debt than they have cash. And also, if we go to their year one free cash flow for 2020, it was actually also a negative number. So unfortunately, doing a discounted cash flows analysis for this business comes out with like a negative output. And so based on that, I would have to assume that Cathie Woods is probably investing in this business for reasons besides a discounted cash flows analysis. The second business that she's looking into, that she's holding a pretty sizable portion of in her ETFs, is Coinbase Global. Coinbase, for those of you who don't know, which is right here, is essentially a platform that allows people to trade cryptocurrencies. So I'm just going to start this one off by doing a quick little discounted cash flows analysis using some of their growth estimates and their free cash flow estimates, which I have right here. I've already plugged in the values, and we can see, I'll show you where I got these values from. The growth rate for years 1 through 5 I got from Yahoo Finance, as we can see right here. It comes out to about 66.30%. And then for the growth rates for years 6 through 10, I just put in a conservative value of 10%, but we can play around with that to figure out what intrinsic value would be based on different growth estimates. For the year one free cash flow, it came out to $2.97 billion, a value which I got from TradingView right here. In free cash flow, we can see it comes out to $2.97 billion. And for their net cash minus their net debt, I got that from Yahoo Finance as well. If we just scroll up, go to the statistics tab, scroll down, we can see that their total cash came out to $4.39 billion, and their total net was about $1.89 billion. And then for their total shares outstanding, that value I got right here, which came out to $141.79 million. And essentially, after we plug in these values from their current financial health, we can see that the intrinsic value per share calculated from a discounted cash flows model comes out to be about $1,766 per share. And for a 50% margin of safety, based on these current values, we would want to buy it at about $883 per share. Now, compared to Coinbase's current share price of $351, this discounted cash flows model would basically be making the claim that Coinbase is currently heavily undervalued. But like I've said in previous videos, the discounted cash flows model is not fully comprehensive. It's not a perfect model, but it is a model that we can use to reference when we're trying to figure out the intrinsic value of a business. So now what I'm going to do is go into their annual report and start by looking at their financial statements, which start on page 5. This right here is their balance sheet. And as we can see, their total assets have actually nearly tripled from about $5 billion to $15 billion as of the second quarter ending in June 30th, 2021. And that means that their total stockholders' equity has increased immensely from about $900 million to about $4.6 billion. And then right here on page 6, we can see their income statement. Their net revenue from the month of June 30th, 2020 to June 30th, 2021 has increased from about $100 to $200 million up all the way to $2.2 billion, which again is a massive increase. So we can see these are probably at least some of the reasons, if not all, probably not all the reasons, but these are probably some of the reasons why Cathie Woods sees this as a valuable investment for the future. And then we can see their net income attributable to shareholders has increased from $32 million up to $1.6 billion. And lastly, on page 10, this is their cash flow statement. We can see that the cash flows provided by their operating activities came out to be $7.3 billion, up from $630 million in 2020. And then their net cash provided or used in investing activities was about $330 million, up from $500,000 in 2020. And then their cash flows provided by their financing activities came out to be $1.4 billion. And so the increase in their cash year over year was about $8.4 billion, which again is a massive number. Their main revenue sources, as we can see on page 49, come from transaction fees from trades that occur on the platform that make up a substantial part of all of their revenues. And basically how it works is it depends on the price and quantity of the crypto transaction that determines how much revenue they make from each trade. On page 65, they go into a little bit in depth of their risks, and 3 key risks that I thought were interesting after reading the quarterly report were that their revenue is dependent on the price of crypto and the volume of transactions on their platform. Also, transactions from Bitcoin and Ethereum make up most of their revenues. So if the demand for Bitcoin and Ethereum drops off, then Coinbase's revenues may be adversely affected. And also, as they expand, they're going to attract more attention from US and foreign regulators, as well as governmental authorities. So that might have adverse impacts on their revenues in the future. The last business that I want to look at, as we can see from this article right here, is Roku, which makes up about 5% of her ARK Innovation ETF. If I go to Roku right here, we can see that in the last 5 years, Roku is up 1,675%. And based on the discounted cash flows analysis that I've done for Roku, after plugging in these values, which I found from Yahoo Finance, as we can see right here, if I go to analysis, scroll down, we can see that the growth estimates come out to be about 64%. And then I just slashed that in half to be a little bit conservative for years 6 through 10 at 30%. And then for the year 1 free cash flow, I got that from TradingView, which we can see right here. That came out to $52.81 million. And then for the net cash minus net debt, I got that from Yahoo Finance just by going to the statistics tab. We can see that their total cash on their balance sheet is $2.18 billion minus their total debt, which is $520 million, which comes out to about $1.65 billion. And then their total shares outstanding sit at about 117.71 million shares. And after doing those calculations, we can see that the intrinsic value per share based on this discounted cash flows model comes out to be about $700 per share, with a 50% margin of safety of about $350 per share. And that, compared to their current share price of $280, makes Roku seem like a very attractive investment at the current point, because it is basically saying that Roku is currently undervalued based on their current financial health. But like I said in the past, it's not fully comprehensive, so I would encourage everybody to do their own research before making a decision like investing in Roku. Now, if we go into their financial statements, on page 75, they start off with their balance sheet. And as we can see right here, their total assets have increased from about $1.4 billion to $2.2 billion. And then their total stockholders' equity has increased from about $700 million to about $1.2 billion. On their income statement, we can see their net revenue broken up by the revenue from their platform and player revenue sources. Their total net revenue for 2020 came out to be about $1.7 billion. And then they're still, unfortunately, operating at a loss, as we can see right here, but their revenues are increasing. And as the revenues are increasing, they will probably eventually turn a profit. But that, of course, is a big risk for current investors who may want to look at investing in a business that is unprofitable. And lastly, this is their cash flow statement. As we can see right here, their net cash from operating activities has grown immensely from 2019, from $13 million up to $148 million. Their net cash used in investing activities was $81 million, most of which was used in the purchase of property and equipment. And then their net cash provided by financing activities came out to be about $500 million, most of which came from under market offerings of equity. So that might lead to a bit of share dilution for current shareholders. But again, that's another risk that investors will have to look into if they plan on buying into Roku. As far as the business overview for Roku goes, for those of you who don't know, Roku is essentially just a streaming platform, and they are the leading TV streaming platform by watch hours in the United States. The three main steps of their business model include growing their active users, increasing engagement by growing their total streaming watch hours on their platform, and then lastly by monetizing these activities. And basically this platform creates an ecosystem for consumers and both content creators and advertisers. So it's a little similar to like YouTube, for example. They create a platform where people can come on, provide content, where other people can watch the content, and then where advertisers can come in and market their products and services to consumers who are watching streams on their platform. And that's basically it for the three stocks that Cathie Woods is holding that could potentially beat the market. Let me know what you guys thought about these stocks, if you guys are investing in any of them. And if this video provided you guys any value, be sure to leave a like and subscribe to the channel if you guys haven't already. And I'll see everyone in the next one.